Hi, everyone. Welcome. So my name is Thea. I lead marketing at Stitch. Stitch is a payments solution that's based in South Africa. We operate in South Africa and Nigeria. So welcome, everyone, to this conversation. Jihan and I were just joking that this is probably the third or fourth time that we've spoken about embedded finance together on one of these panels. But I think it speaks to how relevant the topic continues to be. I think a couple years ago when I was at Catalyst Fund, we released a report on the state of inclusive fintech. And one of the things that we asked investors was what trends they foresaw over the next 3, 4, 5 years that they were most excited about. And almost everyone said embedded finance was the thing that they were most looking forward to seeing grow. And I think that continues to be true. And there's a few reasons for that. One being these innovations enable a much better user experience, a much better payments experience, right? This idea around making that as seamless as possible. Also, it enables solutions that wouldn't otherwise be available to customers. It leverages existing relationships that they have with other brands that they have trust with. And so for a lot of these reasons, I think there's been a lot of innovation in this space and a lot of excitement around it. So I'm going to let these panelists introduce themselves. So when you do so, please tell us a bit about how your business leverages an embedded finance strategy and how that provides more value to the customers you work with. Start with Henry. Yeah.
All right. Thank you very much, T. My name is Henry Mascot. I'm the co-founder and CEO of Curacel. At Curacel, we're building what we like to call modern digital infrastructure for insurance across emerging markets. That means a couple of things. We have a couple of products across the insurance value chain. Our claims processing and fraud detection product powers some of the biggest insurance companies across the continent, like AXA, Old Mutual, and Jubilee. We are backed by Y Combinator, Tencent, etc. We're currently in 8 markets at the moment. For the scope of a conversation around embedded insurance, we have a product called Curacel Grow that enables businesses, digital businesses, banks, logistics companies, fintechs to add insurance to their products across 8 of the markets that we're currently present in. There are a couple of definitions, for what embedded insurance means. But for me, I like the definition around being able to add banking or insurance products to any existing product using technology. And for us, we're really excited about that because whilst in more mature markets like Europe and in the States, embedded insurance, embedded finance is sort of like something that is there out of convenience for consumers. Within the African context, it's really sort of like a must-have because in our ecosystem or because of culture and how we've sort of like developed, insurance is not one of those things that people readily buy. So embedded insurance essentially allows us to be able to go into the user journey of what people are doing and make sure that we can protect their risks when they're doing that. I'll use maybe 2 examples from some of our existing clients. One of them being Alat, one of the first digital bank in Nigeria. Essentially, the users can go to their mobile app, pull out the app and essentially buy insurance without having to go to an insurance company, talk to a broker, etc. Topship in the logistics segment, as a user is booking a shipment on the platform, insurance can automatically be added as well. So for us, we're really excited about embedded insurance, not just because it's one of the global trends, but because it creates an opportunity within the African ecosystem that we can close the protection gap by being on the user journey. Yeah, that's pretty much it.
Cool. Hi, everyone. My name is Dustin. I'm a commercial director at a business called Smile Identity. Smile Identity is a digital identity verification provider. And we work with some of the fastest growing businesses across the African continent to help them to verify and onboard users at scale and in real time. So we're an AR business at its core, so we leverage facial biometrics in combination with various golden sources of truth across the African continent to really help make the onboarding journey as seamless as possible for our clients, to reduce the friction that's involved in trying to onboard, because whenever you introduce additional requirements of your users when they're trying to onboard, that friction often leads to things like drop-off, which is obviously not ideal for your product. So we try to maximize and limit the amount of friction that takes place. I think from an embedded finance perspective, naturally, when you're introducing a financial service within a financial services product within your company or platform, typically there's two reasons why you're going to need KYC. Number one is it's regulated in most instances. So you need to ensure that KYC is handled correctly, because ultimately KYC can be the gatekeeper to your financial service or product. If you get it wrong, it means you let fraudsters through the door. But not only that, it also means that you potentially risk having a large number of ultimately good users that are not able to access your platform purely because you've got a KYC process wrong within your user onboarding journey. So I think it's so important to ensure that you understand the dynamics within the industry and product that you're trying to onboard users into, but also understanding the nuances in various or different geographical regions across Africa and how KYC needs to be handled is so important to ensuring that you get the right amount of users that start in your onboarding funnel and actually end up using your product.
Gotcha.
Hello everyone, my name is Jihan Abass. I'm the CEO at Lami. Lami is an insurance API. Our goal was really to digitize the entire insurance value chain and provide it in an API that businesses were able to use to integrate and embed insurance products into their platforms and interfaces. The reason why we chose this approach is really because we really wanted to contextualize the sale of the insurance products, as opposed to having people have to come back and have to buy insurance products separately. I think one of the core problems in Africa is really that there's a very low insurance penetration. We wanted to see how we could use technology to take insurance to customers and plug it in at the exact right time where they might need it. Some of the interesting use cases that we've been able to do is, for example, with a lot of lending platforms, asset financiers, we plug in relevant products for the assets that are being purchased, for example. And for us, it's really a way to increase the pool and increase the accessibility of insurance products generally.
Awesome, thank you.
Hi guys, good morning. My name is John Egwu. I'm the COO at Autochek Financial Services. At Autochek, we are an auto tech company, and majorly we are trying to make car ownership accessible and affordable for the average African. We're currently in 9 markets, and what would say maybe 70% of Africa's GDP. And critically, when you look at things, credit, financing, it's really nascent in Africa. People really don't have access to those products. And in the concept of embedded financing, it allows us to offer more products. In the case of Autochek, you just don't buy the vehicle. You're buying the vehicle, you're getting insurance, you're getting credit line for yourself, the vehicle registration, your tires, your batteries, quite a lot of the services around your car, so that you do now have a 360-degree value offering. And really, embedded financing helps that, right? Because you, like Justin said, the barrier to entry from KYC is minimal, because with one KYC, you can onboard this customer for all these other services. And I really think that's how we deploy embedded financing in Autochek.
Awesome, thank you. So I'd like to start by diving into the payments piece. So obviously at Stitch, we're a payments API, and so Stitch can be embedded essentially anywhere within the payments flow or checkout flow of our clients. And the reason for this is that it reduces barriers for the users when they're making the payments, right? It reduces the number of steps and also increases trust because they're seeing that within this existing flow of the brand that they know, right, and that they're shopping with. So maybe starting with Henry and Jihan, or we can start with Henry. How are you thinking about innovation when it comes to like the payments piece itself and reducing some of those steps?
Yeah, thank you very much. Again, so we like to think about our business as so we're a product company, we're a software company, right? And obviously our vision, our mission as a company is to be able to help drive insurance penetration. And so when we're building out the infrastructure, we need to be able to enable experiences that allow users to have a seamless experience. So whilst we have, like a product that is an embedded insurance product, across the value chain, we have a couple of, use cases, right, that has to do with payments. On our claims product, insurance companies, health insurance companies, obviously in our main market in Nigeria, have to pay 5,000 hospitals every month. And so it's very important. Okay, let's take a look at it from an insurance perspective. One of the blockers for insurance adoption is claims payments, right? So if you buy insurance and it's time to get paid and you can't get the payment, when it's time to renew, it's going to be a problem. So from a payment perspective, we try to see how can we provide the technology, the experience that enable these insurance companies to pay, whether that's hospitals, whether that's consumers, faster. One of the reasons we started, in the company a couple of years ago was fraud, right? So across the insurance, ecosystem, it said that 20% of claims payouts are fraudulent. It's like a couple of billion, somewhere around like $12 billion within the continent. So we work really hard to enable these insurance companies to make sure that they are able to easily verify those claims so that providers can get paid easily. So that's one use case around payments. More practically for us, we're working hard to see. So right now, a lot of the insurance companies, what they do is within our ecosystem, they process the claims, they can automate fraud detection, and then there's a bit of struggle to get all that data out of our ecosystem into banking apps, into disbursement apps to get payment done. So we try to help there. When we also think about like payments, one other place that we're excited about is letting consumers do bite-size insurance or be able to buy insurance from a bite-size perspective. Again, that's a payment thing, right? Because, we were kind of war, but over the past couple of days, a few conversations we're having around how Africans, I don't know about the rest of the continent, but mostly like Nigerians like, sachets. Like, if you're going to do, create anything, allow them to be able to get small versions of it. But insurance is one of those places where in most of the markets, insurance companies require premiums annually, right? So maybe there are a few insurers that are starting to get a bit, innovative, and they allow quarterly payments. And I also remember, when Griffin started, they allow users to pay monthly and so on and so forth. So payments is a big issue around being able to pay for premiums. So on that side, we're really excited about seeing how can we enable premium financing, because again, the insurance companies, because of regulation, they might not be willing to let people pay for insurance daily and so on and so forth. But if you have the right infrastructure, you can enable other ecosystem partners to come in, finance those premiums, and then users can pay daily, weekly, and so on and so forth. So from a payment perspective, these are some of the things we're currently working on and thinking about.
Awesome, thank you. And Jihan, on your side?
Yeah, I think for us it's fairly similar. I think being able to pay in installments, I think one of the things that we noticed is that, for example, maybe use the use case of like a motorcycle rider. It's not that he cannot pay the $30 for his insurance premium, but it's just that he cannot pay for it all at once. So for us, it was important to be able to break that payment up into bite-sized pieces, something that was reasonable for them, and be able to reconcile that with the actual policy. Another use case for payments for us is really also paying the insurance companies, which is a huge headache for most intermediaries in the market. So how are we able to ensure that insurance companies are paid as policies are coming in and being paid and it's all reconciled effectively? And I think that was also quite interesting for us, because we had a lot of headaches at the beginning trying to figure out what's the right structure for this. But of course, it makes it so much easier to build relationships also with on the underwriter side. if you're offering something that's quite different compared to what they're used to in the market. So most intermediaries would pay the insurance companies on a monthly basis or even a quarterly basis, but for us, we're able to pay a lot more frequently, which was mostly because of the technology and the infrastructure that we were able to build.
Awesome. And John, on your side.
Okay, apologies. Yeah, I think from an Autochek perspective, the idea is how do you enclose the payment within a smaller circle, right? And as a customer or as a consumer, I don't have to think of multiple payment points, right? And really what we try to do is ensure that through the financing available either for insurance, for annual maintenance, either for credit life, all that payment is handled within the first payment or the first deal structure, right? It eases the entire convenience aspect of the conversation. And I think really making payment invisible when it comes to embedded financing, there has to be a lot of customer education, right? Because we live in a climate where people feel like you're overcharging them, right? Because ideally they don't understand the concept of what they are buying. And I think it's on all of us who are really driving this trend in the market to invest a bit more in customer education where I'm buying an asset and I'm understanding that I'm also buying an insurance part of it. I'm buying maybe a tire, I'm buying a battery, and all these accrue to the monthly installments that you expect from me. If that visibility is not there, you get to see quite a lot of struggle, a lot of friction between the product and the consumers. That's my view on it.
Awesome. And Dustin, I guess from a KYC perspective, how do you work with the payment partners that some of your clients are leveraging to reduce barriers in the process from onboarding all the way through to making those payments?
Yeah, I mean, at the end of the day, it all comes down to friction in the onboarding journey. There's no doubt that KYC is a point of friction in the onboarding journey. So it's about trying to understand how users interpret that friction, and then ultimately work with our clients and partners to try and reduce it as much as possible, right? So, I mean, I think there's no doubt that a huge drop-off takes place when the KYC process comes in. And it's about looking at that and saying, okay, well, at what stage in the journey are you asking the user to perform that KYC process? Is there a way, based on your product and the way it's regulated, to change that, right? Is there a way to get the user onboarded in the simplest possible manner, get them using your product, get them to kind of create a connection with your product to the point where at a later stage perhaps they can go through a sort of larger friction barrier to do a full KYC verification. At that stage they're already familiar with your product, they like the way it works and that sort of thing. So there's a lot of that type of kind of working with our clients and figuring out how best to position that element of friction in their onboarding journey. Then I think there's also a UI UX element to it. It's about really understanding your users, really understanding the geographical differences in how users interpret the user experience of your platform, and ensuring that you cater for your audience, right? There's a large area of drop-off from a KYC perspective purely down to user error, right? And the more that we can do to ensure we understand our audience that's onboarding, and we cater that kind of user journey to that audience, we can reduce things like user error and that type of thing. So it's really about kind of looking at your onboarding journey end to end, understanding where you can reduce friction, and also understanding the elements that you've got at your disposal to do that. And we really try to ensure that our customers have the flexibility to build out their journey in the best possible way that's going to result in a much better throughput rate in terms of clients coming through the funnel and ultimately ending up using and enjoying their products.
Awesome. And I guess speaking of the onboarding journey, so I think one of the benefits of an embedded approach, especially from like a B2C perspective, which is how you're looking at it, Jihan, is that you have access, kind of instantly, right, to a large number of customers. But what does that sales cycle and onboarding process look like for you when you're working with these businesses?
So I guess there's two aspects. There's the first of course, onboarding the B2B to C partner, and then onboarding customers after you've onboarded the partner. So when it comes to the partner, I think generally the sales cycle is about a month to 2 months on average for most businesses. But I think although it may take a little bit longer to onboard them, once you have onboarded them, you have a lot of you're essentially plugging into a platform in which people have already built the trust with their existing user base and customer base. So when it comes to a KYC standpoint, of course, they've already run a lot of the KYC tests and all these different things. So it makes it a lot easier to be able to actually target the customer also with the right kind of product lines. So they already have a lot of information about the behaviors of some of their users, what kind of products people are more likely to purchase, for example. Maybe to give one example, one of our partners is KCB, which is a bank here in Kenya. You wanted to plug in products into their mobile banking channels and apps. And through that, of course, you're able to target them specifically for certain products because they do a lot of loans, like financing for motor vehicles. That's one of their biggest product lines. So you're able to really target with a lot of different motor-related products. And the uptake there is considerably higher compared to, for example, going B2C. So it has been quite interesting for us to see that. But of course, when it comes to the seed, the marketing side of things is really down to the partner. So how much is the partner willing to invest with you to be able to target those customers and provide them with the right kind of products? How are you able to monetize beyond that as soon as you've plugged in? And that has been, of course, for us quite a big learning because it's sort of a balance between, they're not your customer, but of course you want to be able to provide them the right kind of product. So it's been interesting to see different ways that we've tried to onboard the C at B2B2C.
How do you work to ensure that they trust the Lami brand? Like, do they interact directly with you, or is it often white labeled to your clients?
So it's fully white labeled. The only part that happens is really at the end of it where we're servicing the policy. So we would be there with our claims management side, interacting with the customer and processing that side of things. But on the front end of it, actually, they only would see the partner, which I think helps a lot with the trust piece because you only see the partner and you'll see the underwriting partner, the insurance company that's providing the policy. And those are often big names that people are used to seeing on a day-to-day basis. So that's generally how we're doing it.
Awesome. And Henry, in terms of building trust, as you mentioned, there's a gap, right? There's a huge gap in terms of the uninsured. And so how do you work toward gaining the trust of the customers that you're working with and encourage them to keep up with those payments, right, and see the value in the insurance offering?
So again, because we're mostly sort of like an infrastructure company, we have very little touch points with the customers themselves. We provide the infrastructure to the businesses, whether that's insurance companies or digital businesses, to make sure they provide the best experience. To be honest, maybe very similar to what Jihan said, we have very little control over how they treat their customers. We can only provide them with the technology and advice to say, okay, cool, here's how you can do it. Obviously, there are a few things we're doing to help because in our claims products, there's a bit of a B2B2B use case there on the health insurance side where, using our infra, they can, work with this hospitals. We have explored ways to help, like I said, I haven't mentioned this yet. So one of the things that we're still very passionate about doing it. We haven't quite gone mainstream with that product is some sort of a claims factoring product. So because we understand that because essentially, what do you buy when you buy insurance, right? You buy the claims, right? So you're not really what you're buying is your ability to be able to get some money back when there's a problem, right? And so on the service provider side, on the hospital side, when you provide a service, you do want to get paid so you can keep running your business. And so what we do have is a big problem where, on the health insurance side, where you have billions of dollars across the continent that are not paid to providers. So you're a health provider, you provide a service to an insurance company, and then your claims takes somewhere between 3 to 6 months. But you're a real business, like you can't have 6 months receivables, right? So like short version, we provide the infra. There's nothing we can really do apart from making sure you have the right technology. But we are also exploring partnerships where, because we can see this data, we're able to say to, liquidity providers, here's this billions of dollars within this healthcare ecosystem where hospitals can't find money to run their business. We know the claims are valid because we have processed them. The insurance company just hasn't done the disbursement yet because historically speaking, it's sort of like how the industry is built. There are a few providers who are starting to be different, where they pay our claims daily or weekly. But across the industry, in some of the markets we work, it's like months for this. So we try to say, okay, here's the data. Let's get this thing paid out so these hospitals are happy to keep providing service. I hope I answered a little bit of the question. I know it's, yeah.
No, it's the trust piece, right? So,
Yes.
I mean, you're doing what you can from your perspective. It's really on the partners, right? And I guess for Autochek as well, how are you increasing trust from your users to make sure that you're also getting payments on time?
Yeah, so chiming in on that, with the B2B clients, obviously it's a shorter journey because there's a bit more education, there's a bit more awareness of what you're buying, so you find less friction in there. You would obviously deal with the bureaucratic payments, 30 days, 60 days and all that, but I think I find a bit more problem in building trust with the consumers, the B2C aspect of things, right? Because that's where if there is poor or lack of proper sales process, you are having consumers that don't understand what that service is, right? And then that whole friction of trust starts getting eroded. But if you are able through your sales process to effectively communicate what your product offering is, it does build the trust. And I think we can all agree businesses are better built through referrals. So it's about the quality of service you've given to the first person and how that person translates what they have received from you to the other person. So I really look at it from that way, that to build trust in the end in your business operations, obviously your services have to be a bit more efficient. And to have an efficient experience with your customers, you need to communicate effectively through your sales process.
Yeah, totally agree. Cool. I'd like to move to like kind of forward-looking here. So, as we said, embedded finance has been around for a while, and we've seen a lot of innovation and trends in this space. So, what are you guys seeing from your perspective that you're really excited about? And I guess what's next in terms of how you're looking at this from your own business's perspective? Maybe Dustin, we could start with you.
Yeah, I mean, I think for us it's just a push to more and more digital platforms being leveraged. I think obviously it's, as you can see in different regions across Africa, we're uniquely placed because we operate across so many different industries. So almost all financial services platforms, but we also then go into other industries where users are they're either regulated or they're trying to solve for a fraud problem. And what's exciting for us is not just in the key markets across Africa, the traditional key markets, where we've seen a boom in terms of mobile use penetration and a larger percentage of the population starting to actually become employed, transact, start to take out insurance, start to apply for loans and that type of thing, all of which is ultimately a key driver to economies. We're seeing that uptick happen at a rate of knots, which is super, super exciting, right? And like I mentioned, not just in the traditional key markets, but also in kind of what you might call your kind of second tier markets across Africa. It really is starting to get significant traction in terms of mobile transacting, which is phenomenal, and I think is only going to accelerate economic growth across the continent.
Awesome, thank you. Henry, over to you.
Trends, future-looking trends. Yeah.
What's exciting for you?
What's exciting? So again, embedded insurance has been like, when you read all the literature, right? It's been around it's been around since the 1920s. But I think it's sort of like what we have is a little bit different now, because what used to exist is you have things like affinity partners, where the experience is more referral based. You're sent to the insurance company's website, and so on and so forth. So some of the things that really excite me, being a product guy, it's the API part. It's like it's really embedded within the ecosystem. It's again there's sort of like there's a progression journey around how again focusing on embedded insurance. Like I said, within our ecosystem we have a lot of use cases around embedded finance, but just focusing on embedded insurance for a little bit. So there's the affinity partnership where you're just referring people, and in some markets it's still a problem because of regulation. If you don't have the right license, you can't be front-facing for insurance. You have to refer to the insurance company. What we will really be, what some of the future we see that we're really excited about is being able to integrate deeply with some of these platforms. So right now, let's say with our implementations with some of the banks and the neobanks, it's just a button that you click or a widget where you get a list of products you can buy. That's it's like what happens right now in Nigeria. Car insurance is a price. It's like a percentage of your car's value. But I spend most of my time in London, and that's not how car insurance works. It's like, where do you live? How old are you? And things like that. So the data is valuable in being able to figure out what the price for you is. And so I, to some extent, excited about the prospects of being able to deeply integrate on the embedded insurance side with some of these platforms where you're not offering the same products to everybody, but you are able to offer products based on, user behavior, based on transactional data. So you're together with an SME, bank, like we are with like Lenco, and on their dashboard, they're not seeing health insurance for everybody. They're only seeing, hey, you just hired Thea. Maybe you want to buy her health insurance, or, do her device insurance for her new laptop, right? So where you're embedded within these ecosystems deeply, and you're able to make recommendations with data. We're not there yet, but that's one of the exciting parts. A second thing to mention in our short top is some of the things we're also seeing in more mature markets. Like a friend, one of the guys that I met recently, that I'm really excited about their business, a company called Shaw in the States. And Tesla, when they launched Tesla Insurance, launched using their infrastructure, right? So maybe another part that I'm really excited about is being able to enable local manufacturers like Innocent, which is the only car manufacturing company out of Nigeria. I don't know any other indigenous one in Africa, really. But to be able to enable those guys launch their insurance schemes super easily. But yeah, pretty much I'd stop there, so others can go with the rest.
Thanks, Henry. Jihan, do you have thoughts?
Yeah, I think when initially, a few years ago, I think the core thing was really around like invisible payments, invisible KYC, which are like core to just like the sale process, right? But I think over time, what we're going to get to is really, how can businesses get more revenue? How are they able to actually generate additional revenue through embedded finance and embedded different kinds of embedded finance, whether that's lending or it's insurance or other segments. And I think that's what I'm the most excited about is how are we going to evolve into that new phase where it's less about what's needed, which is I guess the payments and the KYC, into unlocking more value, which is both value for the businesses and also for the customers. And I'm really excited also about like the evolution of the insurance space as a whole. I think, at the beginning, embedded insurance or insurance via API was the last thing anybody wanted to hear about. But now we're seeing a lot more people getting excited about it, both from the insurance company side or businesses. And I think just seeing that evolution is also really exciting from my side.
Yeah, I like what you said about it now unlocking more value, and I think more innovative solutions that weren't, able to be offered before, right? It didn't exist before. What are some of those solutions that you're looking at from your perspective that you think are now available because you have access to this data, because you are able to embed it?
I think it's really just getting insurance to the point of being invisible, just like how payments has become invisible in many aspects of our lives as we have it today, but getting insurance to that point of being invisible. So that when you're purchasing something, it's coming with all these different, it's equipping you to own an asset in a really useful way. And I think that's what I'm really, really excited about, is people not having to think about insurance, but it coming with all the goods and services that they're buying on a day-to-day basis. And I think that is really going to help create so much value, because I think one of the things that we've seen here is that there's really, people are not really that excited about the insurance companies or insurance being sold in a traditional way, but being able to put it into things that people are purchasing and making it a bit more exciting, I think will really transform how people are viewing it. Because I think the core part is really making the claims journey as invisible as the purchase process was, but I think that's also going to take a lot of time to get there eventually.
Awesome, thank you.
Yeah, I think for me, excitement would be looking at Africa, the landscape. Many would agree that we're still in very nascent stages, be it insurance, be it credit penetration, be it whatever it is that you're offering in Africa. So that sizable opportunity does really excite me, because if you do look at statistics, I think the adult population is upwards 800 million. It does create that incredible appetite for whatever product that we would be embedding our financing offerings in. Clearly creating more value for the business, creating more value for the consumers, and overall really improving productivity and wealth in the continent. So for me, that is quite exciting. At Autochek, we are positioning ourselves to really be a front leader when it really comes to all your auto care across this market, be it in Morocco, Egypt, wherever you are really in Africa, and really having that seamless experience, like Jihan said, where you're not thinking of what you are buying or what you're paying for, but really enjoying the convenience that comes with that service. I think these are really the exciting trends for us at Autochek as we look at Africa.
Awesome, thank you. In the last few minutes, I also want to touch on sort of regulation and compliance. So obviously, as we know, regulation can open up doors for businesses like yourselves. It can also pose a lot of challenges, right? So in the markets that you're working in, what are some of the challenges you're facing when it comes to regulation, and how can embedded businesses or offerings like yourself, help to sort of minimize the impact of those barriers for the clients you work with? Maybe we'll actually start here with you.
Yeah, I think that's a very touchy segment, right? Because, yeah, despite being in the auto space, you obviously have to play around with quite a lot of the regulatory guys, because insurance, like Henry and Jihan said, is heavily regulated. And I think it boils down to we engaging the stakeholders more, right? The decision makers, the policy makers, so that we can start influencing what really needs to be done and improving the current nature or state of things. Because also I don't believe you can run a business without being compliant, right? So you can either leverage on partnerships, right? Either going white label where you are under the cover of the properly regulated entity to offer your service. But I think there has to be a lot more engagement from our position with the government, with the policymakers to ease things as it is today.
Awesome, thank you, agreed. Henry, over to you. Thoughts on this?
So maybe two points here. Obviously, I think that in the space that we play in the insurance space, regulation can go a long way to driving penetration. You can't rent an office in California without insurance, right? So regulation can go a long way towards enabling the ecosystem to grow and covering reducing the protection gap. From the compliance perspective, obviously, a key part of our value proposition is on the embedded insurance product is essentially, two things, right? Technology and compliance. Like, you don't have to try to figure out how to, do an insurance product, understand what it is, blah, blah, blah. We're going to do all that for you. Obviously, our sweet spot is, businesses that are across multiple markets. You can easily move from one market to the other without having to think about, what license do I need to be able to embed insurance and sell insurance in this product? That we can do all that work. and we can easily enable you to do that easily. One point on the first one that, so something like that happens in Egypt is, for instance, for the lenders, digital lenders, the KYC, by the way, Dustin, I don't know, you guys are not live in Egypt yet, right? Are you?
We are with the document verification, yes.
Okay, so on the lending side is, the KYC still involves you to, get the individual to sign a physical document. So, so when you're talking to a lot of all the digital lenders like Halan and the rest of them, they tell you, hey, we'd love to do this digitally, but like, we have to sign a document, right? And so on and so forth. So yeah, so my point really on the compliance side, regulation can help to drive penetration. But for us, for the partners we work with, we don't want them to think about that on the insurance side. We want to think about it for them, and then, they can make more money. Simple.
Jihan, is it similar for you?
I think for us, one of the things that we've seen is just having open dialogue. The regulator here is actually very modern, I think. I actually saw somebody from the IRA outside, and I was super excited to see them here because they're coming to see all the new startups that are coming up in the insurtech space. So I think that's also a testament to how the ecosystem has really evolved and changed and grown. And I think, of course, there were issues like, having physically signed documents. There was a thing before we had to have like a document franked by the underwriter who was issuing a policy. But, I think having conversations with them and actually explaining to them the barriers of what this means to increasing insurance penetration or accessing different customer bases. I think most of the time I would say the regulator is quite open. Now we're venturing into new markets, and I think we're also trying to navigate the new regulators in other markets. How do they work? How do they operate? What's important to them? But I think the core part of all the regulation for insurance is really just protecting the customer. And I think that's also how we view it, right? We're trying to provide what's best for the customer and ensure that they have a seamless experience. I think we have actually a lot more in common than initially I thought probably when starting out.
That's really interesting. And Dustin, I know you guys operate across multiple countries, so how do you see this changing also across markets?
Yeah, I mean, it's very interesting because these types of changes in regulation, whether that be coming from a data protection standpoint or a central bank's point of view, can have massive impacts to the user journey from a KYC perspective, right? And I'll use two examples of kind of what's happened recently in Nigeria. So the two largest ID types that we use from a source verification perspective are national identity number and bank verification number in Nigeria. Now, both of those have seen significant changes recently that have ultimately had a big impact on the onboarding journey for a lot of our clients in those regions. So national identity number, for example, has just gone through a tokenization process. Now, the intention of the regulators is obviously to ensure that data protection is handled in a much better manner, so that people aren't sharing their raw identity number with just anybody, right? And they're needing to then go to a reliable source, generate a token, and then use that token to verify themselves. Now, what that means in terms of a user journey perspective is what we spoke about before. It's more friction, right? Because that means the user potentially has to, while they're trying to onboard onto your app, they have to exit your app, go to another app, generate a token, then come back and put it in. So that obviously creates massive amounts of friction, and it's about how do we try and reduce that. So for us, it's about having very close relationships with the regulators, with the ID authorities that are out there, understanding when they're trying to go through an initiative like this, what the impacts are, and figuring out how our technology solution can make that process work together with them, because we understand that what they're trying to achieve is for the benefit of data protection across the region. And there are ways to work together to make it as seamless as possible. On the other hand, on the bank verification number perspective, it's all around consent, okay? And what I think the central bank saw was that a lot of people were using this ID type to verify people, but they weren't necessarily getting the user's consent in the correct way. And that's so crucial, right, from a data protection perspective. But the way they went about doing that is they've now moved towards ensuring that the user provides consent through a one-time password. Now, once again, additional friction to the process. Okay, and how we solve that is just by working together with them, showing them those elements of friction. When they're proposing big changes like that, it's about hopefully being a thought leader in that process, and ultimately representing the consumer at the end of the day and saying, well, here are the implications of that. This is how we can potentially work together to make that a bit more seamless. So a couple of examples, but very, very pertinent in terms of getting users through your funnel and how those types of changes can massively impact that.
Totally. Constant innovation needed to stay on top of these changes, right?
Absolutely.
And reduce that friction. Awesome. Well, thank you so much to our panelists. So as you can see, there's a lot of innovation and excitement happening in this space, and we'll continue to work toward making that sort of payments and onboarding experience as seamless and frictionless as possible. Thanks, everyone.